Good evening and happy Friday. This is Shana from the Trade Exchange. I'm very happy to be back with you tonight. Now I want to get right into the big news this week, and that was the Fed meeting. The Fed got together September 19th and 20th, and there was some very interesting commentary that came out of it. So take a look at the 10-year yield. So you see the spike in the 10-year yield? Well, this was the sell-off of treasuries because the Fed, they didn't raise interest rates this time. However, they announced they want to do it one more time in 2017, and economists are predicting that to happen in December. They also announced 3 more that they expect to happen in 2018. Now, in regards to the balance sheet, they have the $4.5 trillion balance sheet, and they keep mentioning this, and they want to start unwinding that as well soon, as in October, so just next month. So with this positive reaction about the economy and the positive economic data that caused them to say all this, we have unemployment low, we have steady job growth, we have household spending increasing. We see that traders are moving out of the treasuries, causing the yield to go up, and that's what you're seeing right there. Now, inflation, that's the target. They've been trying to hit that 2% target, and it's still low. And they said, they expect a little bit of a boost in inflation because of the hurricane and the impact it had, but it's going to come right back down, and they still think we're going to be below that 2% level. However, again, with the optimism about the economy, the traders have moved out of treasuries, as we see right there, causing the yield to go up. But on the inverse, take a look at gold and the impact that gold has had, because gold is a non-yielding bullion, so there's the opportunity cost of traders who are staying within that. So we see the sell-off in gold. Gold is down 1.81% this week. It had the sell-off following the Fed meeting. It came back a little bit today, and that's just because it's a safe haven, it's a safe commodity, and with all this tension going on, this geopolitical tension with North Korea threatening to drop the hydrogen bomb over the Pacific, and the United States official coming out saying that if North Korea does this, it's going to be a game changer, and they're not giving it too much credence. However, going into the weekend, a lot of traders still want that safe haven. So gold came back a little bit today, but again, it's still down for the week, 1.81%. Looking at oil, so oil's had a great week. It's actually its third weekly gain, so they've had 3 great weeks. It's up 1.65% this week, and we had great Baker Hughes numbers. So the U.S. Oil rig count, it's down 5 at 744, and the total rig count's down 1 at 935. So OPEC got together this week. They all met in Vienna, and they said that they want to urge this commitment, keep doing these production cuts with these countries. And they said they finally are seeing a dent in this global supply glut that they've had. So this is really good news. They've seen the demand for oils go up, and as the refineries are reopening from Hurricane Harvey, because keep in mind, we lost about 25% of them had to shut down for production, and those are opening back up. So as the demand for oils going back up, we're seeing the pricing going back up, and that's really great. Also, Commerce Bank came out and they said Nigeria might be getting on board. So keep in mind, Nigeria and Libya, they never agreed to these production cuts. However, Nigeria seems more willing to start participating in them. So again, a lot of great news backing up oil, and it's up this week 1.65%. Moving over to equities, I want to talk about a company that many of you know that I personally love. It was Apple. So Apple has had a lackluster week. You see right here that it's down 5% this week. Well, they released the iPhone 8, and they said the lines haven't been that long, it seems. And then the Apple Watch Series 3 came out, and it's been having connectivity issues. So with that, Apple is actually on track to have the worst week for a product launch that they've had since the first iPhone came out in 2007. So that's a pretty big statement right there. Also, for the month, they're down 8%, and they haven't been down that much in a month since April of 2016. Now, Apple's a big component of the Dow, so what's the impact on the Dow? Well, you'd be surprised to see that the Dow is still up even with this impact. Take a look at the indices. So the Dow is up 0.36% this week, and that's even with Apple pulling it down. It closed out 22,349.59. S&Ps are down 0.03% this week. They closed out 2502.22, and the Nasdaq is also down 0.34% this week. They closed out 6426.92. Now, VIX, take one last thing, the VIX, we're still below 10 on the VIX, so not a lot of volatility. We have all this tension with the geopolitical turmoil, and still, once again, our VIX is closing out below 10. And last but not least, just worth mentioning is Brexit. So we heard from UK Prime Minister Theresa May. She was speaking out of Italy today, and she had some talks trying to re-engage those Brexit talks again. And some interesting things she said, a couple of them being that she wants the EU migrants. She wants them to be able to live and work in the UK still. And she said they just have to register. She wants the UK to continue to contribute to the EU budget. She doesn't want to leave those member states out of pocket. She wants to cover the fair share of the UK. She proposed a big new security agreement that she wants. And she wants the EU to become a nice partner and a friend of the UK. and as well as trade. She wants the two sides to come up with a much better model than what's currently existing with Norway or Canada. So, with all that being said, Prime Minister Theresa May still expects Brexit to happen in March of 2019. So, quite a few interesting things happen this week. I want to wish you all a very, very nice weekend, and I look forward to joining you next week. Thanks so much. Bye bye.